I have something to say, people. I have something to proclaim, and it's something that you never would have thought you would hear from an investment YouTuber in the year 2022. But what? Bear market. I say this because I just bought 50 different stocks and I am still in the stock market. I'm still investing. I didn't take all my money out. I still have faith in me over the long term making more money than what is currently being made in the stock market. And that's why I'm making this video. I want to show you what I did, why I did it, and I just want to give you a little faith that not everyone's bearish. I mean, I'm bearish in the short term, but I'm bullish in the long term for sure. So in this video, I'm going through a back test that I do, that I find stocks and I add them to my portfolio. I do this quarterly. If you want to see how I do it, why I do it, this video, is this the secret best stock screener for massive growth? I made this over a year ago. And what it is valuesignals.com did a white paper, and they basically figured out some of the best ways, fundamental factors to screen to find stocks and then build a portfolio of those stocks. So this factor, listen to this. When you use two different factors, you use the price change of a stock over a 6-month period, and then you also use the price to book ratio. All of those stocks that were tested using these two factors and created a portfolio of these two factors, the portfolio made 1,157% better than the market it was tracking. What's also crazy about this is that it happened at a time when stocks were essentially flat. It was not a good time period when they were doing this back test. So honestly, it's been something I've been kind of excited about. I started trying to do this in May. I did my first allocation. And the way this works is you have to buy a whole new set of stocks every time you do it. You can't add money into an existing portfolio. So I had to buy 50 stocks back in May, and I have to hold those stocks for 1 year. After 1 year, I will sell those stocks. Now I just bought another basket of stocks today, and I have to hold these stocks also 1 year, so I could sell them late September next year. In another couple of months, I'm going to do it again and again, and essentially I will have essentially 4 different portfolios of 50 stocks, and all 50 stocks, after 1 year period, I will be selling each of those stocks, each of those portfolios of stocks. So what does this portfolio look like? Let me show you. So this is the portfolio I created. I used M1 Finance, and basically if you do want to use M1 Finance to invest in the stock market, I have a little affiliate link below. Take a look at that. M1 Finance is really good for buying big baskets of stock, basically. So the reason I'm using them is because it was really easy to basically hold an entire different basket of 50 different stocks. So I really like it for that reason. And so let's just go through some stocks, and you can see here we have Marathon Petroleum, Penske Automotive, ExxonMobil, Foot Locker, Cigna. So there are definitely companies you've heard of inside this portfolio, but then there's also companies like South Jersey Industries. I have absolutely no idea what South Jersey Industries does. I have no clue. So what I'm doing here is I'm doing a quantitative route of investing. So basically I'm just using quantitative factors. I'm just using price to book ratio, and I'm using the price change of a stock to find a basket of 50 stocks. It's quantitative. It's not the only strategy I do. I do other strategies. I have ETFs, I have individual stocks, right? But this is a part of the portfolio. So I'm going to go over the holdings, but I'm actually going to link this portfolio down in the description below. So if you do want to take a look at this portfolio, you can go ahead and see it on M1 Finance. You can all watch it and track it, see how it does if you want to. Come back here in a year and see if it did okay. But so this is the Valmentum sector breakdown. I call this Valmentum. That's just what I made because I made it up. It's called Valmentum because it uses value, because price to book, low price to book companies, those are value type companies, but it's also using momentum because it's the price change in those companies. And it's counterintuitive. It's like using a value and a growth metric together to find stocks. I think it's an amazing idea, and that's why I'm always excited about this whenever I do this, and I hope it works well. We'll see over the next couple of years as I try to do this. But Valmentum sector breakdown, these are the different breakdowns. We have energy is the biggest sector. The next biggest is healthcare, and then you also have utilities, you have industrials. So what this actually ended up creating after I ran the screener was essentially it seems like a pretty defensive type of portfolio, a recessionary type of portfolio that someone might have. So I thought that's interesting. In terms of the size of the companies that made into this portfolio, it was pretty interesting. So we have market cap here, market cap being how big the capitalization is of these companies. The largest company is ExxonMobil, $352 billion. That's a big company, of course, large cap company. Then you have Cigna, Cigna is also a pretty big company, obviously. It's much smaller than ExxonMobil, but it's definitely a big company, a large cap company. I think Marathon is in here, and then you have some decent sized companies. And what happens is because the company, let's say ExxonMobil, is so big, it brings the average up to 18 billion. But the thing is, this is an equally weighted portfolio. I put the same amount of money in each of these stocks. So what we really are looking at is the average of the portfolio. We'll call it 5 billion. That's the median size of the company. So mostly my exposure is of smaller companies inside this portfolio. Like I said, this uses price to book as a metric for value. So basically what this is showing us is from the smallest to the highest price to book value. By the way, one of these is out of order. Sorry about that. But the largest price to book value is actually this one, which is 2.2 book value, price to book value of 2.2, which is not a lot. To put that in perspective, the price to book value of Apple is 41. So a lot bigger company in terms of price to book value, so more expensive in terms of price to book value, in terms of net worth of the company, which is what book value is. So these are much cheaper stocks compared to an Apple. Not saying that Apple's overpriced or anything like that. I'm just saying from a price to book value perspective, it is. And by the way, oh my God, there's crazy lightning and thunder outside. Sorry for the noise if you can hear it. Last thing about this portfolio, so the 6-month price change. So this is the other factor that this uses. So what you do is you start with, okay, what are the biggest increasing stocks over the past 6 months? You take only the top 250 of those, then you rank them by price to book. So when we go with the top best 250 stocks in terms of growth, this is what it looked like, and then this is what I got after sorting from the book value. So the highest gaining stock in this was 110%. And think about it, over the past 6 months, a stock that gained 110%, that's weird, right? Like no stock is usually, a lot of the stocks now are actually down unless they're energy stocks, right? So this is kind of an anomaly in itself. Then we have other ones that are up 50%. And we have momentum type stocks. Now, what's interesting is if you ran this in a normal year when the stock market was not down, this would all be positive. But because the market is down, you do have some companies that did actually lose money this year and they still made it into the screener. So that's interesting. There's just not enough companies that are up that much this year that also have good price to book values. So anyway, if you want to follow along with this portfolio, take a look in the description below. I will do another video next quarter and let you know how the next one looks, and you can also keep track of that one. So that is all I have for today. So thanks so much for watching. I hope you liked this video. If you did, hit that like button and subscribe to see future videos like this. By the way, I have another video. It's coming up on the end screen right now. Thanks everyone so much for watching. I do want to remind you, I'm not a financial advisor. This is not financial advice. This is just my opinion. And let's face it, I am not right 100% of the time. So please do your own due diligence.